Zillow quits the home buying business, citing its inability to forecast prices. So today, Zillow announced that they're getting out of the iBuyer home flipping business in its entirety, which is a huge shock to the market. Now, they had actually stopped or paused their buying a few weeks ago, and they announced this, but no one thought they were going to cancel it entirely. It now appears that they are retreating completely from this business, and this is a huge win for home buyers, people who are wanting to compete in this market, who are seeing large institutional buyers gobbling up available homes. You're going to see one big buyer no longer in the market now. This is massive. Zillow is actually going to lay off 25% of their entire workforce, an incredibly huge number of people. The whole process is going to take them several quarters, according to what they said today. And their company founder said, quote, "We've determined the unpredictability in forecasting home prices far exceeds what we anticipated, and continuing to scale Zillow offers would result in too much earnings and balance sheet volatility." What is this saying? It's saying that they're buying homes for too much. They're unable to predict what they're going to sell for, and they're losing money. They go on to say, "We have built and learned a tremendous amount operating Zillow offers. It served only a small portion of our customers." Well, I'm sure it served a small portion of your customers, but it took up a lot of your cash. Median price in America right now is just over $400,000. When you're buying thousands and thousands of units, if you lose just 2 or 3% on that, it's a huge number. This is yet another hit for Zillow. Their stock is down 34% so far this year, and this is a time where we're seeing the most gangbuster real estate market that we've seen in 15 years, and one that's much more healthy than the one from 15 years ago, and they're still having a tough time. And I think the losses are just beginning. They announced that this quarter they lost $328.2 million. That's a lot of money for a company whose valuation was $1.74 billion a year ago. And keep in mind, the losses are just starting. On the mainland US, we are seeing prices flatten out. If Zillow is paying too much then, and they're not seeing the increase in the market they need to recoup their costs, these losses that they had in this quarter are just the beginning, and next quarter could far exceed those. Now, what does this mean for the home buyers out there right now? As everyone knows, it's been a really competitive market for a while. Homes are getting bought up oftentimes by large institutional investors. These are companies like Zillow, but also hedge funds that are buying up properties to put them on the rental market, companies like BlackRock as well. This is one large institutional buyer that's now not going to be out there driving up prices by showing an artificial increase in demand. I think in the end, this is going to lead to a more balanced, fair, and equitable market for people trying to get in those homes. I'm going to read from Market Watch. The real estate giant on Tuesday blamed a faulty algorithmic model for ditching its iBuying business of buying and selling homes quickly, and it said it would lay off about a quarter of its staff. The surprising exit, announced with pedestrian quarterly profits, trashed shares in another rough trading session Tuesday, a day after an analysis said that 2/3 of the homes it bought are underwater. Now, let me tell you, it's really tough to be underwater in this market right now. We're seeing incredible increases. What this tells me is that something that us real estate agents have been saying for a decade now, the Zestimate is not accurate. And I always joke, there's a reason they don't call it a Zacharate. Well, they trusted their own Zestimate for the value of a home. Turns out the home is worth less than they thought. Now they have these delays with going and fixing up some of these homes and getting them in top shape for market. A lot of people are doing that. So that means they're having to hold these properties for longer because there's just not as many home service people out there doing the work. They're absolutely at max capacity. So Zillow buys these properties, they buy them for too much, they hold them for too long, and when they go to sell them, they're seeing that the market is flattened out and all their predictions are totally wrong. In an interview with CNBC, their founder Barton said it was a tough but necessary decision and said, "Sure, there are those wagging their fingers at me," he acknowledged. Predicting the price of homes 6 months ahead is really hard. No kidding. This really speaks to the hubris of Wall Street and these large companies and some of their practices. Now, I've got nothing against Zillow, but I do think the business model is a problem. Zillow is at its end just an advertising company. They have a platform that displays public data in a way that's engaging to the customers. They do a great job of that. They have ads, they get money from that. But mostly they get their money from real estate agents who are also placing ads on there. And it was a profitable business. Now, it does need some adjusting, and they are making adjustments, going to their flex model where it's a referral-based system, which is more of a win-win for everybody. But all the temptation of vertical integration and expanding your business caught them too. And it's catching a lot of companies, and especially in the real estate space. What this company is finding is what a lot of companies find. When you get out of your core competency, you don't know what you don't know. It's hubris to think that they were just going to be able to enter the real estate market, start an iBuyer program from scratch, implement the program, get the talent, and be accurate with it right off the bat. They felt this hubris because they had so much cash to play with. And this is another problem. With the publicly traded companies, there's so much pressure to increase revenue and find other revenue streams to satisfy the investors that they get out of their lane. You're seeing this in other real estate companies, and some of them that are publicly traded as well. They get out of their lane, they start saying, well, we're going to have title services as well, and we're going to have home inspection services, and we're going to have lenders, and we're going to be an all-in-one shop that's completely vertically integrated from the bottom to the top. The problem is they don't know those businesses, and it's going to take time to develop them. They might not be as good at those businesses as they think they are, and their competitors might be better. You look at this compared to individually owned companies, where they are beholden only to themselves and not the investors. You see far less risk in the management of those companies, and you see far more successes than you do failures. Ultimately, Zillow is going to be fine, and Zillow is going to be here another 10 years down the road, I think. And when we look back, no one's even going to remember when they had an iBuyer program. But at the end of the day, there are a bunch of people who are going to be deeply impacted by this. A layoff of 25% of a workforce at a time like this is especially difficult. So long Zillow to the iBuyer program. There are other great iBuyer programs out there and companies that are focused just on that are doing just fine and who are also very surprised to see this. At the end of the day, Zillow is going to be fine. Those programs, those other companies are going to be fine as well. And in the end, this is good for buyers because it takes some of the players out of the market that they're competing against. Hopefully, this will have a stabilization effect on prices, and that will allow more buyers to get in homes. I'm Mike Drutar. I hope you enjoyed this. Leave any comments down below. Let me know what you think about Zillow exiting the home buyer program. I hope to see you again real soon.